All right, guys, so let's start with question number 2. So question number 2 is on cash flow statements. So question number 2, part A, you're asked to calculate the 3 operating cash flow items. So what are the 3 operating cash flow items here? You have cash receipts from customers, cash payments to suppliers for inventory purchases, and cash payments for other services. So cash payments to other services and employees. Okay, right. Now, when it comes to cash flow statement, make sure you know the formulas. Right, now you're given 2 balances, 30th of June 2020 and 30th of June 2019. Keep in mind, 30th of June 2019 balance is the opening balance. So this is the opening balance of accounts receivable, which is 157,200. This is the opening balance of inventory, which is 104,400. This is the opening balance of prepaid rent, which is 5,400. And this is the opening balance of accounts payable, which is 75,400. And this is the opening balance of wages payable, 9,400. And these are all closing balances. Okay, so let's start with cash receipts from customers. Now, as I told you, you do need to know the formula. Okay, so the formula is sales plus beginning accounts receivable balance minus ending accounts receivable balance minus discount allowed minus bad debts. Okay, keep in mind, bad debts will be provided to you in the exam. You don't need to calculate bad debts. Very important that you remember that you know that. Okay, so sales. There's only one sales figure, which is 540,000. 540. And beginning accounts receivable, which is 157,200. And you minus closing balance of accounts receivable, which is 231,600. You minus discount allowed, which is 8,100. And bad debts, which is given to you in the exam. Where's bad debts? Here, of $5,500. There you go. So cash receipts from customers is 452,000. So it's always important that you write the formula first, followed up by the numbers. Very important. Next, let's calculate cash payments to suppliers for inventory purchases. So this is the formula. You start with cost of goods sold or cost of sales, and you minus beginning inventory balance. You add ending inventory balance, add beginning accounts payable, minus ending accounts payable, minus discount received. Okay, cost of sales. What do you have a cost of sales? It's 296,000. 296. Beginning inventory, 104,400. Plus ending inventory balance, 96,720. Plus beginning accounts payable, which is last year's accounts payable balance, 75,400. And minus ending accounts payable, current year's accounts payable balance, which is 71,000. And minus discount received, 12,900. That's what you get. All right, cash paid to other suppliers and employees. Now you're given other expenses, you need to minus non-cash expenses, mainly depreciation, minus beginning prepaid expense, plus ending prepaid expense, plus beginning accrued expense payable, such as salaries payable, rent payable, electricity payable, and you less ending accrued expense payable. Okay, now guys, you're given other expenses as 176,000. What you need to do is you need to minus 94. We don't need to take this again because this bad debts was already deducted here, so there's no need to take that. Okay, so 176,000, you minus depreciation, which is 94, you minus 94, and then you minus beginning prepaid expense. Now let's check for the prepaid expense here. What's the prepaid expense? Okay, prepaid rent here. You have prepaid rent. Opening balance is 5,400. And you add ending prepaid expense, which is 4,400, plus beginning accrued expense payable. Now what's the accrued expense payable here? Which is wages payable. So it could be electricity payable, could be rent payable, could be anything. Okay, so you have opening balance of wages payable, which is 6,400. Sorry, opening balance of wages payable is 94, my mistake. Opening balance of wages payable is 94, and you minus 6,400. There you go. And you get the answer, 84,000. Okay, let's move on to reconciliation. Reconciliation of operating profit. Okay guys, when it comes to reconciliation of operating profits, you just need to follow these steps. So basically what we're trying to do is we're calculating operating cash flows from net profit, which means we need to filter out non-cash transactions and also reconcile profit for accruals. Okay, so let's start with the net profit. Now what's the net profit? Okay, do not take, now this is the gross profit, do not take this, always take the net profit. You start with the net profit and you add depreciation expense. So the depreciation expense is 13,000. You add this, you add 13,000. Now what you do is you take changes in current non-cash current assets. You do not take cash into account, keep that in mind. You take changes in non-cash current assets and current liabilities. It should be current liabilities. Do not take long-term liabilities into account. Okay, all right. Now guys, what we do is now we add all credits and we minus all debits. For example, if accounts receivable increase, that's an increase in current asset. It's 2018 to 2019. It's a debit, so you need to minus that. If inventory decrease here, for example, decrease in current asset is a credit, you add that. Okay, so let's start from accounts receivable. As you can see, accounts receivable increased from 2018. From 2018, it increased by 8,800. Now that's a debit. Remember, it's an increase in current asset, which is a debit. You need to minus that. So increase in accounts receivable, you minus. So you see. And then you have inventory. Now, inventory, as you can see, decreased from last year by 8,600. Decrease in inventory or decrease in current assets is a credit. Is a credit. Yeah. So you need to add that. Credits you add. There you go. You add decrease in inventory. Do not take equipment into account. Cross that out. You don't need this. Do not take changes in accumulated depreciation. We already added depreciation. You don't need this. Accounts payable. Now accounts payable is a current liability. Increase in accounts payable. Now as you can see, accounts payable increased by 6,200 from last year. Increase in accounts payable is a credit, so you add that. That's what you see here. Increase in accounts payable, you add. Electricity payable. Electricity payable decreased by 8,000 from last year. Decrease in electricity payable is a debit. You minus that. That's what you see here. And that gives you net cash from operating activities of 68,700, which is correct. All right, guys, I'll see you all in the next video.